Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I found one great, awesome clip with Greg Kidd talking about the SEC versus Ripple case in the last 5 days. I'm going to play it at the end of this video, so hold your horses, okay? Let's start here. This is Scott Lynn. He's with Masterworks. Check out how some everyday Americans are helping to fight inflation and investing 10 million plus paintings from Monet, Picasso, Banksy with Masterworks, okay? It says word about inflation. And it says contemporary art versus selected assets, high inflation. Contemporary art, 23%, emerging equities, 18.7%, S&P 500, 16.2%, real estate, 5.2%, gold, 2.8%. See how this $1.7 trillion asset class could help defend your wealth. I'll put a link in the top of the description of this video for you. I've been buying Masterworks artwork myself for the last couple of months. So as kind of like for my portfolio, I use it like it's kind of like a hedge. Why not have some exposure to art? Just want to let you all know that the Bitcoin religion is real. They really believe all this stuff. This is a tweet from CoinDesk. We've all heard Bitcoin is slow. Bitcoin is expensive. Bitcoin can't be used for payments. And none of this is true anymore, says this guy. And they did a whole little one of these Twitter live things. They did this on Bitcoin and how when you send the Bitcoin and sometimes it takes a long time to get from point A to point B, that's just your imagination. And when it's expensive, that too, just your imagination. The idea that XRP moves in 3 seconds, Bitcoin's better. You just don't understand. They understand. And that's them at a, what are they call them revivals, religious revivals. She's being saved. All right, here's a little piece of information. I don't say 3-letter things on this channel, but I will go through this briefly so that a lot of you probably don't understand this. 11 years ago today, Bitcoin developer decided to visit that 3-letter organization. Satoshi Nakamoto was never seen again. And I'm not going to read all this, but I'm going to tell you the gist of it. This guy was famous for being one of the people who was in communication on this platform, I think. Bitcoin, the message board, was it bitcoin.com or whatever? But anyway, the point is that this guy, Gavin Andreessen, was famous for being one of the tiny handful of people who was communicating back and forth with Satoshi Nakamoto. Then he decides he's going to go speak at the 3-letter organization and do a presentation about Bitcoin there at the headquarters. And then that was the moment that Satoshi never did communicate again with anyone, and nobody's heard from him since. Well, I can tell you this, if I was this organization, this is exactly the setup for how I would create the mystique of Satoshi Nakamoto if I had created it myself and I was this organization. Not saying they did, I'm just saying what a great way to make an exit, and then from then on nobody knows, quote, nobody knows who did it. Right. Bitcoin was not, folks, read my lips. Bitcoin was not created by some libertarian sitting at his computer in his mom's basement. This was created by governments / organizations, and I'm not saying any of the names of them. Write it down. We may never be able to prove that, but that's the whole point, folks. And one other point. You think Wall Street, with all the fiduciary duties and the different stuff around Wall Street, do you think that they would be investing their clients and have their financial advisors investing all these people in Bitcoin if they did not know who created it? There's no, or they knew who created it and knew that nobody would ever know who created it. It would never be a public thing and nobody could prove it. So there you go. Now, I made this point today, and it's extremely true. Ethereum 2.0, delay. Lightning Network will work someday is what they keep saying. Delay. XRP Ledger doesn't need a 2.0 or a Lightning Network. If you're wondering why Ripple gets sued, SEC comes after them, the FUD, the hate, all of it, because it works. That's the reason they hate it. It's a threat. That's the reason they hate it. Now check this out. This is Michael Saylor calling BS on Ethereum and Web3 without saying the word Ethereum. Listen up.
What's the, can you please explain to me what Web3 and the beef between Jack and Mark Andreessen is exactly? Did you see what happened? Sorry to have you analyze Twitter like it's Shakespeare, but can you please explain to me why there was any drama over this topic?
First of all, Web3 is a term that's used to refer to, the part of the economy that's token finance. So if I'm launching an application and my idea is to create a token along with the application and issue the token to the community so as to finance the application and build support for it, I think that that's the most common interpretation of Web3. There are other interpretations too, and so I'm just going to refer to that one. And I think the beef, in a nutshell, not articulated, but I'll articulate it, is whether or not you should focus all your energy creating applications on top of an ethical digital property like Bitcoin, or whether you should attempt to create a competitor to it, which generally would be deemed as a security by the Bitcoin community. So I'm going to put on my Bitcoin hat here.
Yeah.
Right? All the tokens that are if it's driven by a venture capitalist, well, it's a security. If there's a CEO and a CTO, it's a security. If it's all these projects, they're companies. Foundations are companies, right? If you call them a project or a foundation, it doesn't make it not a security. They're all, in essence, collections of individuals that are issuing equity in the form of a token. And if there's a pre-mine, an IPO, an ICO, a foundation, or any kind of protocol where there's a group of engineers that have influence over it, then to a securities lawyer or to most Bitcoiners, and definitely to anybody that's steeped in securities law, you look at it and say, well, that passes the Howey test. It looks like a security. It should be sold to the public pursuant to, disclosures and regulations. And you're just ducking the IPO process.
All right. So then we had this. I'm not going to go into this video, but this was from that Bloomberg article. I just wanted to remind everybody of this quote. The only country on the planet that thinks XRP is a security is the United States. That's pretty interesting. Now, I told you I'm going to be working on the list. The list is the Freedom of Information Act request list from Empower, the Empower organization, and Jason Foster over there. And this is the list. And I added the company names from where all these people were from. Today, I looked up Rebecca Caden from Union Square Ventures. And remember, these are the people from the Enterprise Ethereum Alliance who communicated with Bill Hinman May 2017 to December 2020. Okay? Now, in this interview, this lady says to Rebecca, she says, regulation could be coming. Are you concerned? And I said, of course she's not concerned. She's in communication with Bill Hinman at the SEC regarding what will become the Ethereum free pass in just 1 month, because this video is from May 3rd, 2018.
So cryptocurrency, you guys back Coinbase, Polychain Capital. I know Fred Wilson is really excited about it. We just read a story about someone predicting a 90% correction in cryptocurrency. Yep. Also, regulation could be coming. Yep. Are you concerned?
So I think, the USB thesis on crypto really stems from a belief in decentralization. And crypto is really the first byproduct of that. This idea that massive platforms, the Facebook and the Googles and the Amazons, which have on one end done a lot of good for consumers and on another aggregated the web in a significant way, has created a need for a decentralized internet. And blockchain is really the first technology behind that, and crypto the first example of that. our thesis is around the decentralization. We believe very much that crypto is going to rise and fall and take a while to kind of even itself out. And until there are significant consumer use cases, it's a very volatile asset. So we're less concerned because we see that in the short term, and we're believers in decentralization in the longer term.
Right. So she was, while she's saying all that, she's behind the scenes in communication with the SEC while they work on getting Ethereum a free pass. See how this works? I had not seen this photo. This is Ripple in Paris at Paris Blockchain Summit. I just wanted to show you a couple of these pictures. What's that guy's name? Eric, starts with an M. I forget. I'm drawing a blank. But anyway, these are the people at the Ripple booth in Paris. And here is Greg Kidd. This is from just 5 days ago. Let me hit the refresh here and let's go.
As I'm sure a lot of you already know, right before the Christmas holiday, the SEC launched.
By the way, just so you know, some of you may not know, Greg Kidd was one of the first 10 or so people at Ripple when they started.
Its lawsuit against Ripple, essentially saying that XRP was a security and Ripple had been involved in selling unregistered securities for the past 8 years. Greg, I know you have some very strong opinions on this. Why don't we start with your hot take?
Well, first off, I'm an ex-regulator myself. I work for the Federal Reserve at the Board of Governors in the payments group. And just my observation is, and again, I'm not a regulator now, but that just wasn't the way we did things at the Fed. You didn't launch litigation on the last day before the commissioner of your organization resigned, just especially going into like a new administration. I mean, Ripple's been around for 8 years. There's been a long time to set clear rules, and then you could have arguments or discussions over what behaviors need to change to meet the rules. But to actually just file an enforcement action out of the blue on the day that you resign, so you're not around to actually take the heat for the consequences of what you've done, and then you just sail off into the holidays and a new administration. That's kind of an unprecedented situation. The question is, what was the reason after 8 years that required an urgent enforcement action just on the last day of under a particular leadership? And so this is a highly unusual situation just to start with in terms of the conduct of the SEC, independent of the substantive issues of the case. So it does have me scratching my head as to why this timing, why in this manner, and then we can just climb down into the specifics of the actual case, what's known as the Howey test, which is the test for whether something is a security or is a currency. And really, from my point of view, it comes down to whether an organization like the SEC thinks that people out there can't tell the difference between investing in a gold mine, which has its own stock, which truly is a security, versus gold, which is pretty clearly not a security. And so in the case of Ripple, as you said, Ripple was a company that did raise money from venture capital. It does have investors. I'm one of those investors. I know the difference between when I'm investing in a company versus when I'm investing in something that might have been associated with that company, but is not an investment contract of that company. And that's XRP, which I'm also a holder of. And the SEC has taken the point of view that people don't know the difference, and it is suing to recover $1.3 billion on behalf of those investors, and in the process is destroying tens of billions of dollars of value for those investors. And it does remind me of a quote from Ronald Reagan, who said the scariest words in the English language is, I'm from the government and I'm here to help. So when somebody comes to help me as an investor, which is the primary mission of the SEC, and helps me by destroying, 10 times the amount of value that they're quibbling over, you got to scratch your head, because that just doesn't really make sense from a public policy point of view. It doesn't make sense from a financial point of view. And so it really, begs the question. So that's,
Well, I mean, speaking of that question, what do you think the goal of the SEC was, right? Because generally speaking, they're there to make sure regulations are followed. They're there to make sure the rules are followed. And ultimately, their responsibility is to protect the consumer. So what do you think they were trying to get out of this particular case, especially in the context of, like you said, dropping it right before the holidays and right before this administration is moving on?
Well, to me, this feels like a turf battle. Again, I come from the U.S. regulatory industry, and there's always a question of what does the Fed do versus the OCC versus state regulators. And in this case, the question is, who gets to be the boss of cryptocurrency? Is it FinCEN? Is it the IRS? Is it some other federal regulator? Or in this case, the SEC is saying we want to be the boss of crypto. Yet we don't want to lay out clear rules and whatnot. But this clearly is a chance for them to say, we get to have a big say about how crypto works. Yet at the same time, we don't have the responsibility for putting out a clear set of rules, even though it's been 8 years. And they could clarify, why is Ripple, in their mind, an investment contract, but Ethereum or Bitcoin is not, and also give guidance to all the other companies that are arguably in the same position as Ripple. It could be a Filecoin or a Stellar, Tether, Brave. I mean, those are all companies where there was a stock by the founding company, and then tokens have been issued, and those tokens have been sold to members of the public and are held broadly, not just by accredited investors. And so, the ironic thing here is if you read what the mission is of the SEC, it's to protect investors, to maintain fair, orderly, and efficient markets, and facilitate capital formation. If you go through each of those 5 things, protecting investors, is this fair? Is this orderly? Is this efficient? Does this promote capital formation? And in every one of those checkboxes, this action achieves exactly the opposite outcome. Investors have been harmed. This certainly isn't fair because you can't understand why Ripple and not Tether or not Stellar, not any of those other lists or Bitcoin or Ether. You're not making clear what the distinctions are. It is certainly not efficient or orderly. I mean, there's been chaos in the marketplaces. Folks don't know whether to list or delist. There's problems with liquidities. Loans are being called. I mean, if you wanted to create a situation that was a parallel to having Lehman Brothers go down without clear and orderly wind down, I can't think how you could create more chaos in the marketplaces than just to file an enforcement action with no context, on the last day of the commissioner's leadership of the SEC.
To me, the most interesting thing he said in there was, why not Stellar? And he said it twice. Why not Stellar? And that this is an SEC turf battle. It's not about investor protection. But he says, why not Stellar? And that's at the core. Why is Jed McCaleb getting away with all this? Why is he not questioned at all about any of this? This guy, think about it. This guy was at Mt. Gox. He was involved in Ripple. Then he was involved in Stellar, and nobody's saying a word to him. He continued to sell XRP while the lawsuit was going on. What in the world is going on, folks? I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and ask your friends and family, why not Stellar?